So welcome to our first session for the crypto futures trading course. So in this course, we'll be trying to understand how to become a profitable trader within the crypto futures segment, right? But before getting into that, we need to first of all understand what crypto trading actually is and what is this crypto financial market and how this works, right? So on the screen, we can very clearly see two major domains that are highlighted, right? So the first domain is the Web 3.0 domain, wherein we have tokenization, we have real world assets, decentralized finance, NFTs, crypto, everything that is powered by blockchain, right? When it comes to the trading segment, of course, we have a lot of financial markets in the present day. We have the equity markets all around the globe. We have the forex markets, the commodities markets, fixed income securities. We have a lot of firms that are working around within this financial markets under different market segments. So we have futures, options, etc. We previously had swaps and forwards. If you guys know what they are, right, and so on, right. So this is a quick understanding of what actually crypto market is. So crypto market is the intersection between the Web 3.0 domain and the trading domain, right? So of course, the crypto as a financial market has turned out to be an extremely efficient market on the present day. All thanks to a lot of exchanges getting into this, a lot of financial firms, a lot of algorithmic trading firms and hedge funds who have put in their money within this space, right? We have a lot of adoption that we can see all across the globe for crypto, right? For trading as well as for investment. So this is what the crypto market is. Currently, the entire crypto market is valued at somewhere around 3.5 trillion dollars, with Bitcoin, contributing a major chunk of it, almost near to 50 to 53%. Again, the numbers are what I can recall as per my last analysis. The numbers very quickly change based on the market scenarios, right? Cool. So that's a bit on how the crypto market has formed and how it is working. Of course, we happen to have a lot of market segments here. So we have the spot market and we have the futures segment, right? So when it comes to the spot segment, of course, a lot of traders here must be aware of what spot segment is. So that is where we actually buy crypto as an asset, and we hold it on our on our wallets, right? So when it comes to some wallet, so obviously you can buy crypto, you can store it there, and you can basically transfer that crypto from one wallet to another. Of course, when it comes to the Indian exchanges, this is a limitation because of the regulatory concerns involved. But when it comes to future segment, so that is meant specifically for trading. All right, so this is what is the crypto market. So let's try to dive into this. Let's try to understand how this works, and let's become a profitable trader. And let's also try to capitalize the current bull market that we are witnessing in the space. All right. So first of all, let us understand what futures are. All right. So futures are a part of derivatives, right? So what are derivatives? Derivatives are essentially some contracts that derive their value from some underlying asset, right? So we have derivatives in the Indian market, we have derivatives in the commodities market, under different exchanges, under different financial markets, right? And we also happen to have that in crypto now. Cool. So what are crypto futures? So crypto futures are essentially assets wherein uh, you can buy, sell, you can trade them, you can hold them, right? So they also happen to have expiries. Again, this is for the usual futures, but the futures that we will be trading on are essentially called as the perpetual futures, which don't really have any expiry date, right? So what is a future? So a future contract is basically a legal agreement wherein someone buys or someone agrees to buy or sell a specific asset at a predefined price on a future date, right? Of course, we'll not try to dive into what futures are or what options are in this course, because that is not the scope of this, because we will be more inclined towards how do you take trades, and of course we'll learn everything that is required for the same. Cool. So the next thing is, what is perpetual futures? So perpetual futures are essentially a different kind of futures contract wherein we don't have any expiry date, right? So this is the benefit of perpetual futures. If you are having a buy trade or a sell trade, you can essentially hold it for an infinitely long time unless and until your position gets liquidated. So this is the benefit of perpetual futures. Again, you'll not have an idea of what liquidation actually means. Of course, we'll try to understand this pretty shortly. Cool. So the next thing, without any further delay, let's try to get into how do you actually place your first trade. Cool. So we'll straight away go to our CoinSwitch platform. So this is the CoinSwitch Pro platform. So here you can clearly see we have the spot segment and we have the futures segment, right? So when it comes to the spot segment, of course, you deposit INR, you straight up buy Bitcoin, you straight up buy Ethereum as per your analysis, and you hold it on your wallet. Hold it on this portfolio section. You will be clearly able to see, for example, I have USDT in my wallet worth around 25,000 rupees. So that is what is showing up here, right? So the first thing that we need to understand here is when it comes to trading on futures, you need to have USDT, right? So futures are traded on USDT. Cool. So how do we do that? So what is USDT first of all? So USDT is basically a stable coin. What is a stable coin? So stable coin, again, when it comes to USDT, it is basically the crypto equivalent of US dollars. So 1 USDT is always equal to 1 US dollars, right? But how is it different from dollars then? Because its underlying technology is that of the crypto market, right? It is powered by blockchain. It doesn't rely on banks for getting it transferred from one wallet to another, right? So it takes the stability of the fiat currency and is powered by what crypto actually runs. So of course, stable coins have seen a lot of adoption in terms of transactions in the recent few years, in the recent few months, all thanks to the volatility of Bitcoin. Because Bitcoin, if transferred from one place to another as a currency, we don't know where is it going, right? It dips by 2% within no time. It goes up by 3% within no time. So when it comes to larger transaction, of course, USDT is better, right? Because it is stable. So of course, we will be trading on USDT only. So the first step that is involved is buying USDT, right? So how do we buy USDT? You have to click on this BTC INR thing. Then you have to click on USDT INR, right? And you click on buy. You click on 100%. So whatever INR you have in your wallet, that will be capped out here. And then you can click on this place order. Once you have this place order set up, your order will open here, and once this gets filled, you will be able to see the USDT in your portfolio section. So our first step is done. This is how you buy USDT, right? The next step is how to place your first trade. So you go to futures. Now you can see BTC USDT, you can see Ethereum USDT. Have a lot of things happening out here. So say for example, I want to place a buy trade on XRP. So how do I do it? I click on XRP, right? So the next step is buy or sell. So of course I'm buying here. I'll take the leverage as 1x here. I also try to show you. I'll take the leverage as 2x. I'll try to explain what leverage actually means. So before actually taking the trade, let's understand what leverage is, right? So quickly, I'll go back to my slide. So what is leverage? So say for an example, you are pretty sure of what is going to happen in the market, but you don't have a lot of funds in your wallet, right? You want to make more money out of what is going to happen. Just for an example, Donald Trump won the elections and everyone expected crypto to go up, right? And it did go up, right? So BTC has almost given 80% movement from its last low, right? So which is a very massive move. So what if you had smaller funds but you wanted to make a lot of money out of this? So this is where leverage actually comes in. So say for example you have $100 in your account and you want to create a position of $1,000. How do you do it? You don't have $1,000 in your account. So you basically mention the broker that I am borrowing $900 from you in the way that you take 10 times leverage, right? So if you select 10x leverage and you have $100 in your wallet, you can essentially create 10 times of what you have. So that basically translates to a position size of 1000 USDT. Now if the BTC price goes up by 80%, you are making $800 on your $1,000 position. But in case you had only put in $100, you would have made only $80, right? So of course, 10 times leverage has also increased your profit by 10 times. So this is how it happens. So let's quickly do this. So we'll be coming to XRP USDT. I'll take a leverage of 2x. I'll not take a lot of risk because see, the profits also increase and the losses will also increase, right? So what I will do is I'll quickly type in 100 USDT here. I'll do 80, I'll do 100, cool, and I'll click on buy or long, right? So what I've done here, I have created a position of 100 USDT, and since I have taken a leverage of 2 times, so only 50 USDT will get utilized from my wallet. You understand? 50 USDT multiplied by 2 times leverage is equal to 100 USDT position. So I have two positions open, one is XRP and one is Solana. Cool. So this is what leverage actually means. Now the thing here we need to understand is what are the risks, what are the pros and cons of leverage, right? So let's quickly understand that. So of course, when it comes to the pros, you have amplified returns, obviously, right? And also the major thing to note here is if you have $1,000 account, right, you will not be interested to put in all your money in one trade, right? What you would want is, taking multiple trades on multiple directions based on the opportunities available. So in those cases, leverage does help because it helps you to keep some funds free in your account uh, without limiting the size of the position that you create, right? So this is the benefit of leverage, but again what you need to understand is it does increase the risk as well, because you know bigger the position size, bigger will be the loss when the market comes down, or in case of a short position, bigger will be the loss when the market goes upwards, right? The next is margin call, right? What does this mean, right? So margin call is also referred to as liquidation event, right? So what does this mean, why this happens, and how this happens, right? So say for example, I just took a trade on XRP, right? And I have invested $50 from my own pocket, and the position size that I have created is 100 USDT, right? So what if XRP comes down by 50% tomorrow? I will have a loss of $50 in my $100 position. But the problem here is I have invested only $50 from my own pocket. So is the exchange going to take risk on its capital? Of course not, right? The broker is obviously going to take risk on my capital, on my invested capital. So this is the margin, right? So what is margin? Margin essentially means how much funds have you invested from your own pocket, and that is the amount of risk the exchange is going to take on this position. So once XRP drops by 50%, the position will get automatically cut off. All right, automatically get cut off, and you will suffer a loss of 50 USDT, which is everything that you have put into this trade. Cool. So this is the problem of leverage. So how do we avoid this, right? The question is, how do we avoid this? How do we avoid getting liquidated? So herein, suppose I have 200 USDT more in my wallet, right? So what I can do is I can increase the margin that I have put into this trade. So I'll quickly click on this add margin option. Then I'll put in 50 USDT here. So once I confirm this, you can see the liquidation price has come down to 0. It was previously at 50%. What does that mean? Whatever price it was trading at, the liquidation price was 50% below it, right? So 50% नीचे गिरते ही मेरा पूरा position exit हो जाता. But now the liquidation price is at 0, right? Why? Because the entire position is getting powered by my own funds, right? So it can come down as much as it wants to, and it will still have my position open. So this is the concept of liquidation, and of course sometimes you need to add margin in case the price of the asset nears your liquidation price, right? So this is what you need to understand about taking leverage, right? Cool. The next is, of course, when it comes to futures, you have a target and a stop loss for a trade. Suppose you bought XRP at $2.5. So you may have a target of $5 for XRP, right, which is 100% move from here, which is 2 times move from here. So if I mention a take profit of 5, right, so you can see I'll create a profit of 97 USDT, which is a very massive profit considering my position size. Also, I'll also take a stop loss. I'll also create a stop loss key. Beyond that level, I will not hold the trade, and that can be $1. So again, my potential risk is $58, right? So in case the XRP price comes down to $1, I will lose $58, and that is my stop loss. Also, I can hold this beyond that level. Just for your information, it's just that I am not taking more risk than this. Cool. I hope you understand what I'm trying to tell you. So this was a quick run through regarding what leverage means, what liquidation prices are, what margin is, right? So I hope you have a clear understanding about this. So what I will advise everyone is just go and take a trade, a dummy trade on your CoinSwitch account, just to understand how things are happening, and you can obviously exit it right away. Cool. Now where from here, right? What we are going to do from here? So the next thing that we are going to understand is, of course, technical analysis and risk management, because this forms the major chunk of what we will learn, right? So when it comes to futures trading, you can consider 20% of it as technical analysis and the rest 80% as risk management, and of course some part of it on to understanding how the crypto market is actually faring right now. Cool. So this is the entire course structure. So I hope you enjoyed understanding how to place your first trade and the basic terminologies of crypto, which is leverage, margin, liquidation price, target, stop loss, and so on. So thanks for watching. See you in our next video.